Hello, am I audible? स्टॉप रिकॉर्डिंग कैसे करते हैं? अभी अब बात Good morning, everyone, and welcome to our webinar on IPM performance for the month of April. Thanks for joining us today morning. In our webinar today, the initial topic that we will be covering is more on the new launches because there are a lot of new launches which happen in the market. And there are definitely certain launches which really need to be looked into. We call them the high-powered new launches. So we will be discussing about some of the high-powered launches that the Indian pharma market has been seeing in the last 2 to 3 years. And we'll also look at the reasons for their success. Then we will also be looking at the IPM therapy performance, the growth drivers, the top 40 corporates, top 40 brands, and the key takeaways. So coming to the high-powered new launches. IPM sees a lot of action in terms of new introductions every year. A select set of brands, however, turn out to be outliers. They are the ones who definitely manage to have a significant turnover, something which majority of the players don't manage to have. Our discussion today is centered around a few such brands. I may not have been able to cover all the brands or all the therapy areas, but then we have just done a study of how things have happened, how things have progressed, and we have taken a few examples for the same. So the discussion points include the trend of new launches in the Indian pharma market. And when we are doing the analysis, why do we call certain brands as high-powered new launches? We have taken certain parameters for considering or calling them high-powered new launches. So we have taken brands which cross rupees 10 crore turnover in the MAT period of launch. It is not within the year of launch, it is the MAT period. So it is possible that if I'm looking at MAT April data, the brand may have launched in the month of Jan of that year. But then in the consecutive months, we also see a good multiplier effect over the years. And we also look at the market share of that brand within the molecule. And we have looked at the market share on the MAT April data. We have taken a few examples of selected high-powered new launches. As I said earlier, there may be more such examples, but given the time limits, I may not be in a position to cover all of them. And summary. So when we are looking at the trend of new launches in the Indian pharma market, a new launch is triggered. It's for a company as an avenue to propel growth. Why do I come out with new launches? Because I want to enter a new therapy area. I want to take advantage of some opportunity that has come in, and that is supposed to trigger my growth in the Indian pharma market, or is help me in establishing myself in that particular therapy area. So if I were to look at the trend in this table, I have taken 4 years, MAT April 21, 22, 23, and 24. I have looked at the number of new launches that have happened in each of these years. So these are the number of new brands that have got launched in each of the year. If you see on an average, the number of brands that get launched each year hover somewhere around 2000 to 2700. Now this year, April 23, MAT April 23 has shown the maximum number of new launches. To a great extent, it also coincides with a good number of brands in the cardio-diabetes segment that have gone off patent, which has triggered this higher number of new launches. This another period which has also shown a relatively higher number of new launches is the MAT April 21 period. I can assign this to the COVID opportunity where many of the players entered into the molecules that had high demand in the COVID times. On an average, if you see the value of the new launches for that particular MAT period, it has declined over a period of time. Also, the contribution of these new launches to the Indian pharma market, it was relatively higher in the COVID times, close to 1.7%. But then if you see in the last 3 years, it is ranging between 0.5 to 0.6%. I can say somewhere around 1% or lesser. If I were to see the new launches which have crossed rupees 10 crore in the MAT period, it has steadily declined. In this year, in the MAT last 1 year, the number is 7. It has come down to 7. Now, what is the triggers for which this may be happening. One is the COVID opportunity and the COVID opportunity. So the COVID opportunity was relatively higher in this period. Then off-patent opportunity in the COVID period, some molecules like dapagliflozin went off-patent. And in this period, there were many molecules like sacubitril plus valsartan, linagliptin, sitagliptin. They went off-patent and the opportunity came up. Also, a good number of molecules which were patent protected were launched in the country for the first time. And they had that patent protection opportunity because of which they could make big. We will go through all of these in the coming slides. First, we will focus on the brands crossing rupees 10 crore in the MAT period of launch. Before even discussing these brands, I'll just tell you what working we have done. For this period in March 21, MAT April 21 period, we have seen that majority of the brands which have managed to cross this 10 crore and above benchmark, they are the ones which were launched in the area of COVID or the molecules which had high demand in the COVID period. Also, there are certain brands like Gluxit from Eris or Udapa from USV, which managed to have a good turnover because dapagliflozin went off patent and they could make the most of it. So many branded generics came into the market after DAPA went off patent, but these two brands really did well and they could manage to tap the opportunity. Coming to the MAT April 22 period, though COVID, the entire intensity of COVID had died down by MAT April 22 period, but still some of the players continue to cash on the COVID opportunity. There were also certain places in the gynac segment, remogliflozin in the anti-diabetes segment, which was launched, which managed to pick up well. So if you see the molecules which were launched in this segment or the molecules in which the new launches happened in this segment were the ones where, still there was I would say, some aspect of COVID opportunity that was seen. Some drugs going off patent, Dufastone from Abbott, which has very difficult to produce. Many of the players in the Indian market could manage to get that technology and launch dydrogestrone in the market. Then we had semaglutide from Abbott, from Novo Nordisk rather, which is for the anti-diabetes, which managed to do well in the market. Now there were certain molecules which managed to do well because of the COVID opportunity. Later on, as the demand died, they probably started to degrow. But then in today's conversation, we will be focusing more on while the opportunity existed, those brands managed to make the most of it. That's the reason why I have considered those brands as well. In the MAT April 23 period, if you see, it was dapagliflozin, sitagliptin combinations which managed to do well, or not managed to do well. Good number of brands crossing 10 crores came from this combination. Sacubitril plus valsartan also went off patent during this period. And if you see, Neptaz from Mankind has managed to have a very good turnover in this period. Certain brands like anesthesia, the patented brand from Abbott, Sevitru, which has the sevoflurane molecule in the general anesthesia segment, also managed to have a very good turnover in this period. Similarly, innovator molecule from Bayerzydas, finerenone, the brand Kerendia, also managed to have a very good turnover in this period. So net, if you see, the brands which managed to cross rupees 10 crore turnover in this MAT period were the ones which had the patent opportunity as well as the branded generics which were launched during this period. Then we come to the MAT April 24 period. In this period, while off-patent opportunity existed, but then majority of the brands which managed to cross the rupees 10 crore turnover were majorly the combinations which came in the market. There's only one brand, Thrombonat, from Natco, wherein the off-patent opportunity was tapped into. There were, of course, many other players which came into the market, but then this brand managed to have across a turnover of 10 crores and it's around a 14 crore brand today. It is possible that internally the brands also may be slightly bigger brands because this molecule is a thrombopoietin analog, so may have a good amount of hospital component as well. Then we looked at the next aspect of this analysis, wherein we have looked at the multiplier effect over the years and also market share of that particular brand in the subgroup as of MAT April 2024. So before I go to the different therapies, what we have done is in this analysis, we have taken a few brands and a few therapies. We couldn't cover all the 20 therapy areas, but we have managed to cover close to 5 to 6 therapy areas with some examples. To go ahead and discuss all the brands, first let us look at how we did the calculations for the same. For example, if I were to look at the anti-diabetes segment, we have just taken the dapagliflozin market. Within the dapagliflozin market, there were many brands, almost more than 100 brands which exist today, but we are focusing on those brands which could make the most of it. So while the molecule was launched in the market in May 20, it went off patent in October 20. There were certain brands like Udapa which had the first mover advantage and could manage to have a turnover of close to 11 crore within the first MAT period. I wouldn't say within the first year of launch, because here I'm just looking at the MAT period. And then now after 4 years, it's almost a 64 crore brand. Now, how do I calculate the multiplier? For example, for April 22, when I'm talking about the multiplier of 4, I'm dividing 39 by 11 to get the value 4. When it comes to April 23, when I'm saying the multiplier as 5, I have divided 55 by 11. And when I'm April 24, when I'm saying the multiplier is 6, I have divided 64 by 11. Okay. So this is how we have calculated the multiplier effect. Now, when I'm looking at, which are the brands which are managed to have a good multiplier effect, over here we have taken those brands which are having a multiplier effect of 5 and above. So majority of these brands in this segment have managed to have a very good multiplier effect. As well as if you look at the market share of these brands in the dapagliflozin market, it is 4% and above. Now, in the anti-diabetes segment, we have taken a few more brands like the remogliflozin plus vildagliptin, the semaglutide, the sita plus dapa plus metformin combinations. Of course, the remogliflozin, while the molecule was launched, it really picked up. But when other DPP4 inhibitors or SGLT2 molecules started going off patent, remogliflozin started coming down or declining in trend. But whatever was there, if you look at the launch, at the time of launch, it was a 4 crore. And over the next year, it became a 26 crore brand, which is a commendable performance. Even today, it is a close to 20 crore brand. If you look at semaglutide, now here I have the advantage of patent protection. Within 3 years, the brand was launched in Jan 22. Within 3 years, the brand has now actually crossed 363 crores. It is among the top brands of the Indian pharma market. Also, if I were to look at the after DAPA went off patent, many of the companies started experimenting with different combinations. The CETA plus DAPA plus metformin combination, the 4 brands from Sun, USV, and Eris Life Sciences, if you look at them, they have already crossed 20 crores now. And if you look at the multiplier effect, the multiplier effect is 5 and above. Now, this multiplier effect I have calculated by dividing it over the MAT period of launch. If I were to look at market share of all of these brands, they have got a significant market share in the subgroup in which they are present. And that's the reason why we call them the high-powered launches. Coming to the cardiac segment, we have the patent protected vericiguat, which is used in the chronic heart failure. This brand today, it's around 43 crores or a multiplier effect of 6. Sacubitril plus valsartan, the patent loss opportunity well tapped by Lupin and Entas, having a very good market share of 6% and 5% respectively. Similarly, we have 2 more molecules and 2 more brands from Sun Pharma, which have a multiplier effect of 9 and 12 and have got a strong market share within their subgroups. If I were to look at the next segment, which is the respiratory segment, in the respiratory segment, we don't see a lot of of patent opportunity or a lot of, patent protected molecule or molecular combination opportunity. But definitely here, the strength in the specialty played a significant role. So if you look at the respiratory segment, we have Zydus, Cipla, Lupin, Macleods, who have got certain strength in that particular specialty segment, because of which the brands could manage to have a significant multiplier effect. As well as if you look at their turnover today, most of them have a turnover of 20 crore plus and also have got a strong market share in the subgroup in which they are present. Similarly, I have done analysis in the some two more segments. So if I were to look at the pain and analgesic segments, we have the tofacitinib molecule, wherein if you look at the brands from IPCA and Intas, TFCT-nib as well as Tofatas, which is today they are having a turnover of 60 crore and 23 crore respectively, a very strong multiplier effect. If you look at them collectively, they have a market share of close to 36% in the tofacitinib market. Also, if I were to look at the brand from Fresenius Kabi, the Kabipara brand, though the market share is 2%, this company probably has more of the hospital segment. So the 34 crores that we are showing today may actually not be the actual turnover. The turnover may be slightly more for this company. Cartesian Pro from Pharmet, if you see, it has got close to 9% market share in the collagen and combinations market and has a good multiplier effect for the last 2 years. In the gynecological segment, dydrogesterone molecule was the molecule which was targeted by majority of the companies to enter. As I said, Dufastone has got a very difficult technology to produce, and many of the Indian companies are now able to manage to produce the same. So companies like Alembic, Alchem, Torrent, Eris, with their brands have managed to enter this market successfully. And if you look at the turnovers of these brands, a significant turnover. Though Dufastone still continues to be a strong market leader, if you look at these people, these brands, they have managed to have a good market share, or at least their entry in the market in terms of market share has started well. Ferropinum, the hospital anti-infective from Aristo, also has got a good multiplier effect from 4 crores into MAT April 2021. It is now a 30 crore brand with a strong multiplier effect of 7 and has got a strong market share of close to 7%. Similarly, Ferronim CV from Sun Pharma, a 21 crore brand, almost 58% market share in the ferropinum plus clavulanic acid segment. So to summarize about the new introductions or the high-powered new introductions, on an average, new introductions, they contribute to around 1% or less of the Indian pharma market. There are, however, examples of high-powered new launches that have made the most of the market opportunity and have earned this stature because of strong performance during the time that the opportunity existed. COVID opportunity was something which had a window of just 2 to 3 years. So many brands came, made the most of this opportunity. Probably now their sales may be zero because the demand for those molecules is not there. But when the demand was there, they made the most of it. Strong year-on-year multiplier. While some launches may have happened in COVID, some of the brands continue to gather that strength and grow despite the COVID opportunity going down. So they could establish themselves in those molecules because not for COVID, but for other reasons, there was a demand in the market. Also, there were certain molecules which went off patent, and the high valued patented brand or patented molecule became affordable for the general public or the less affording public, and some brands could have a good multiplier effect over there as well. And despite all the challenges or despite the entire market clutter, because once things go off patent or once an opportunity is seen in a particular molecule, more than 100 brands enter the molecule. It is only the top 5 to 6 brands which manage to have a respectable market share. So these high-powered new launches managed to have a respectable market share despite the clutter and despite high competition in the market. So this was about the high-powered new launches. Next, we go to our segment of the IPM therapy performance for the month. So if you look at for the month of April, the IPM has shown a value growth of 9.2%. Unit growth remains stagnated. The segments which showed a very good double digit, or the bigger segment which showed a very good double digit value growth, are the cardiac segment, the anti-diabetes segment, the derma, neuro-CNS, anti-neoplastic, and the ophthalmology segment. While there are other segments also which showed a good growth, but these are amongst the high contributing segments in the IPM. If I were to look at the growth drivers, for the month of April, the market is mostly the price-driven growth, and to some extent the new introduction driven growth. As I said, there were certain, the number of new introductions in this year has come down relatively as compared to the previous year, as well as the value of new introductions has come down. If I were to look at the certain therapy areas where, at a all India level, the volume growths are low, but then there are certain therapy areas like the cardiac, the anti-infectives, the derma segment, and the anti-neoplastic segment, which continue to show a respectable volume-driven growth. Whereas for majority of the other segments, the growth is price-driven or to some extent new introduction-driven growth. Coming to the top 40 corporates, almost all the top players have shown a very healthy double-digit value growth. USV stands out because it has shown a double-digit value as well as unit growth for the month of April. Coming to the next 20 corporates, we have more number of corporates which have shown a double-digit value and unit growth. FDC, Cadila, Fords, and Natco. These are the companies which have shown a double-digit value as well as unit growth for the month of April. Coming to the top 40 brands. This month, USV, Glycomed GP from USV moves to the number 1 position in the rank. However, at the MAT basis, Augmentin stays at the number 1 position. This is a significant shift in the ranking that has happened for the month of April. Some other brands which continue to show a very good and robust double-digit growth are Rosuas, Pan, Budecort, and Ecosprin AV. Among the next 20 brands, it is Pantop, Pandi, Asilog, Telma, Ribelsis, Electral, and Brilenta. These are the brands which have shown a very robust double-digit value and unit growth. So while we say that the unit growth has stagnated for the month of April for the Indian pharma market, but despite those challenges, there are several brands in the top 40 brands which have shown a double-digit value as well as unit growth. To summarize, the IPM has shown a robust value growth of 9.2% with all therapies showing a positive value growth except for a few. New introductions and price growth have continued to be positive, whereas volume growth is negligible for the month of April. However, cardiac, anti-infectives, and derma segments show a relatively better volume-driven growth for the month. For the month of April, the top players have shown a very encouraging value growth, and Glycomed GP moves to number 1 position in the Indian pharma market for the month of April. That's all from our side for the Indian pharma market performance for the month of April. And thank you everyone for joining us today. Have a very nice week ahead. Thank you.